Welcome back to the Daily Crypto Deep Dive. Today's episode is all about the core question we've been hearing for years. Is Bitcoin really digital gold? Is Ethereum truly digital silver? And more importantly, have those comparisons held up over time? It's one thing to call Bitcoin a hedge, or Ethereum a modern store of value, but what does the actual performance say? So in today's deep dive, we're going to do this properly. We'll walk through what would have happened if you'd invested $1,000 into Bitcoin versus gold, or Ethereum versus silver, at 4 different moments over the last decade: 2015, 2018, 2021, and 2023. We'll run the numbers, put the assets side by side, break down the macro context for each period, and look at where you'd stand now in early 2026. And at the end, we'll talk about something a lot of people are quietly asking. Why did gold and silver surge so strongly in the last 12 months while crypto paused? For thousands of years, gold and silver have defined wealth. They've backed currencies, built empires, and been passed through generations not just as commodities, but as symbols of permanence, stability, and trust. When the world gets uncertain, when currencies wobble, when wars break out, when central banks lose control, it's gold and silver that people run to. Not because they pay yield or promise growth, but because they endure. They sit in vaults. They resist time. They don't default. That's why they're still here. And that's why they still matter. Now fast forward to the digital age. As Bitcoin emerged from the ashes of the 2008 financial crisis, it didn't ask to replace Visa or become a payment layer. Not at first. What it wanted to be was simple: a hedge against monetary debasement. Sound money with a fixed supply. Digital gold. And as Ethereum came along shortly after, with a broader platform for decentralized computation, it quickly earned a different nickname: digital silver. More flexible, more programmable, a little more volatile. But still, something that held value, powered systems, and echoed the role silver played for centuries as gold's counterpart. That comparison, Bitcoin as digital gold, Ethereum as digital silver, wasn't just branding. It was about narrative architecture. It gave investors a familiar lens to understand something unfamiliar. And for over a decade, that lens helped onboard millions. But here's the thing. Narratives are powerful, but performance is truth. So today we're going to test the narrative. Not with theory, but with data. What happens if you treat Bitcoin like gold and Ethereum like silver, and invest accordingly? What would your returns have looked like across the last 10 years? Where would you be now if you trusted the digital store of value thesis over the traditional one, or vice versa? That's what this episode is all about. We're not just talking about which coin pumped harder. We're breaking down how these assets behaved during inflation scares, recessions, liquidity booms, and macro resets. And at the end, we'll talk about why the last year flipped the script, why gold and silver surged while crypto cooled, and what that means for the next phase in this evolving story. Let's start with 2015. Crypto was still considered fringe. Bitcoin was hovering around $315. Ethereum was just launching, priced at around $1. Gold was trading at about $1,170 an ounce. Silver was sitting at $15.70. At that point, the dominant macro narrative was still the post-2008 recovery. The Federal Reserve was getting ready to raise interest rates. Inflation was low. There wasn't a lot of institutional interest in crypto. It was mostly developers, libertarians, and early adopters. But if you had dropped $1,000 into Bitcoin back then, that would be worth roughly $290,000 today. That's not a typo. Ethereum? Try over $2.5 million. That's from around $1 per Ethereum in mid-2015. That same $1,000 in gold would have grown to about $2,200. Silver, maybe $3,100. So when people talk about life-changing returns from early crypto, this is what they mean. This was the cycle where buying crypto wasn't about charts or hype. It was about conviction. And it paid off big. Now move forward to 2018. Different world. Crypto was coming off a brutal collapse. Bitcoin had hit $20,000 in December 2017, and by the start of 2018, It had already fallen to around $3,700. Ethereum had crashed even harder, dropping to around $130. Gold was steady around $1,320. Silver was at $17.10. On the macro side, the US-China trade war was just heating up. The Fed was still hiking, and risk sentiment was cooling. But again, if you put $1,000 into Bitcoin in January 2018, that would now be worth around $23,000. Ethereum would have grown to about $19,000. Gold? About $2,000. Silver? Around $2,100. So despite the 2018 crypto winter, despite the fear, despite the negativity, crypto still won by a mile. And the lesson here is critical. Buying into pain, not hype, pays. If you had the stomach to step in when it was ugly, the returns followed. Then came 2021. Peak hype. Everyone had laser eyes on Twitter. Bitcoin had pushed to all-time highs of $64,000. Ethereum ran to $4,000 plus. NFTs were booming. Institutions were getting involved. Coinbase IPO'd. Inflation was rising. Stimulus was flowing. The money printer was in full effect. Bitcoin was around $29,000 at the start of 2021. Ethereum was at $730. Gold? About $1,900. Silver? $27. But buying into that hype? The results are more modest. A $1,000 Bitcoin investment in early 2021 would be worth about $3,100 today. Ethereum? Around $3,400. Gold would be up slightly to $2,050. Silver would be sitting at $2,600. So yes, crypto still outperformed. But the gap narrowed. And here's what's interesting. Silver had its strongest multi-year run in over a decade. Ethereum and silver were acting almost in parallel. High beta, strong bounces, but still dependent on broader liquidity trends. This cycle didn't belong to early believers. It belonged to disciplined profit takers. 2023 was a transition year. Bitcoin had just come off one of the worst drawdowns in its history, falling from $69,000 to $16,500. Ethereum was down to around $1,200. Gold was holding steady near $1,800. Silver was beginning to rise again, sitting at $23. There was speculation about spot ETFs. The Fed was nearing the end of its hiking cycle. Recession talk was everywhere. But this cycle was about cautious accumulation. $1,000 into Bitcoin in January 2023 would now be worth about $5,500. Ethereum, around $3,750. Gold would be at $2,650. Silver at $3,100. The performance was solid across the board. This was the closest race we've seen. Crypto bounced, but metals held strong too. This wasn't a hype cycle. It was a recovery cycle. It was less about narrative and more about positioning. So let's make this super clear. If you had invested $1,000 into Bitcoin at 4 different moments, 2015, 2018, 2021, and 2023, you'd have put in $4,000 total. That portfolio would be worth around $321,000 today. Ethereum? Same idea. $4,000 invested across those 4 years would now be worth over $2.57 million. Now compare that to gold. Your total $4,000 would be sitting at just under $9,000. And silver? You'd be at about $10,900. So across the full stretch 1 decade, 4 entry points Bitcoin and Ethereum didn't just win. They obliterated the traditional metals in terms of return. But, and this part matters, they also came with far more volatility, more stress, and more drawdowns along the way. The reward was real, but so was the risk. Over the long term, there's no competition. Bitcoin and Ethereum crushed gold and silver, but the gap tightens as we get closer to the present, especially over the last 12 to 18 months. And that's where things get interesting, because while crypto has consolidated, gold and silver have ripped higher. So what changed? 3 things. 1. Geopolitics. The world got more unstable. Wars, tariffs, Trade fragmentation. That drove money back into traditional safe havens. 2. Central banks. 2025 saw a record year of gold purchases from countries trying to hedge against US dollar exposure. And 3. Industrial demand. Silver, for the first time in decades, had real tailwinds from the green energy transition. Solar, batteries, EVs. Demand was real, supply was tight, and prices responded. At the same time, crypto lost momentum. ETF optimism faded, regulatory overhang lingered, and liquidity conditions tightened. The big runs were already behind us. Prices didn't collapse, but they didn't lead either. It was a digestion phase, and in that phase, metals stepped back into the spotlight. The reason 2025 hit so hard for these comparisons is that it flipped the usual pattern. Normally, when fear rises, Bitcoin has historically rallied with it. Think March 2020 or late 2021. But this time, the fear wasn't monetary. It was geopolitical. And in that environment, Bitcoin didn't act like digital gold. It acted like digital risk. Gold, meanwhile, got the flows. That divergence is what caught people off guard. It wasn't that Bitcoin failed, it was that it didn't behave the way its narrative promised in that specific macro setup. Now, this doesn't mean the crypto story is over. Far from it. But it does remind us that assets play different roles at different times. Bitcoin is incredible in times of optimism, monetary easing, and speculative appetite. Gold dominates when fear and caution return. Ethereum thrives in risk-on innovation cycles. Silver loves industrial booms and tight supply. If you zoom in too close, you'll always find one asset outperforming the others. But zoom out, and the message becomes clear. Crypto rewards risk, metals reward patience. So if you'd invested $1,000 into Bitcoin and gold, Ethereum and silver, at each of these 4 years, what you'd really be building isn't just a return profile. You'd be building balance. Bitcoin for long-term asymmetric upside, gold for stability, Ethereum for innovation cycles, silver for industrial torque. Together? That's a portfolio that wins across multiple regimes. And that's the takeaway for today. Bitcoin is still digital gold. Ethereum still functions like digital silver. But real gold and silver haven't lost their place. They've just been waiting for the right macro backdrop. In 2025, that backdrop returned. And now, all 4 assets are playing their roles again. The key is knowing which role you're investing in. The psychology behind how investors approach these assets is also worth unpacking. Gold and silver operate on deep-rooted instincts: fear of inflation, distrust in governments, the desire for something tangible. Crypto, on the other hand, runs on belief in code, decentralization, and the future of finance. It attracts a different type of risk-taker. But in times of uncertainty, even the boldest traders can revert to what feels safe. That's why gold shined in 2025. It wasn't about yield or innovation. It was about survival. And silver, long seen as the underdog metal, finally got its moment when real-world demand met constrained supply. Thanks for tuning in, and as always, we will see you at the top.